Good morning. It's Thursday, the 27th of October, and we are Signal Centre with Talking Bull. It's Taff and Steve here this morning. Good morning, all. Hi,
Hey,
Taff.
Steve, you good, man?
Yeah, not too bad. I just realised I haven't put my little sticker over my badge. I'm not sponsored. I've been sponsored by Barber, actually. So
You're in
but
trouble.
yeah, exactly. I'll be in trouble with Joe when he gets back. Joe's off on holiday for a week, so you're with the A team, Steve and Taff, and we're going to go through, as we normally do, go through the news headlines first, then dive down into the technical analysis, and yeah, we'll just go through that. Let me bring the slide up.
Sure.
So, Bank of Canada, I think there's an expectation of 3/4 of a basis point yesterday, if I'm not right. They increased rates by 50 basis points, so 0.5% to 3.75. Yeah, we were expecting an increase up to 4%, didn't happen. Bank stated that further rate hikes were likely, but there was evidence that the economy is slowing and inflation is expected to retreat over the next year, with the phase of large rate hikes coming to a close. So on the back of that, we had speculation on the Fed. The Bank of Canada's policy decision was a significant factor in reinforcing speculation that the Federal Reserve could also adopt a slightly less hawkish stance, so maybe slowing down them rate rises and the size of them. This also led to the bank to assess the potential impact of sharp rate hikes over the last 6 months on the economy. US new home sales declined to an annualized rate of 603,000 for September from a revised 677 previously, but this was above consensus forecast of 585. US Treasuries posted further gains on Wednesday amid hopes of less aggressive Fed policy, with a 10-year yield declining to near 4% before stabilizing. The decline in US bond yields again undermined the dollar on Wednesday, and there was also a strong rebound in European currencies as the euro, sterling, and Swiss franc posted notable gains in this technical bounce. Chancellor Hunt announced on Wednesday that the fiscal statement will be delayed from October 31st until November the 17th, but the statement will be upgraded to a full autumn statement. There was some speculation that the decline in gas prices would tend to improve the macroeconomic outlook and potentially allow the government to take a more moderate stance in tightening policy. Today is ECB Day. The ECB will announce its latest policy decision on Thursday today. Normally comes out around 12:45 UK time, and then that's followed up by a call at 1:30. So it'll be interesting to watch that. Consensus forecasts are for a 3/4 of a basis point hike, up to 2%, as well as the rate decision. Forward guidance from the ECB and the President Lagarde will also be an important element in this afternoon's trading volatility to the markets. The Bank of Japan will announce its latest policy decision on Friday, with the central bank expected to resist any change from the very accommodative policy stance. There will, however, be a big market reaction if there is any policy change. That's the Bank of Japan decision on Friday. So plenty to look out for and plenty to get stuck into. We'll dive into charts. Do we want to kick it off, Taff, with commodities or Bitcoin?
Commodities and a bit of crypto.
Yeah, lovely.
Cool. Let me share my screen. Okay. I'm going to kick it off with, I'll start with crude oil. Okay. Is my screen on now?
Yeah,
cool.
it is, yeah.
There you go. There you go. So I'll start with crude oil on the daily. So after 4 days, is it 4 days of just having dodges and indecision, finally we had some sort of a breakout yesterday, and the momentum was really good and really strong, and that could probably precipitate another bullish drive on an intraday. I talked about how price was just being compressed in this region here, in this triangle formation. So we finally broke out of it yesterday, and we broke this. This was resistance yesterday. We broke that resistance, and then we seem to be testing that. It becomes support on return. So we are potentially looking at this support being broken. It could either be broken, and then we could come to this sweet spot here, which would be a retest of this breakout trend line where it becomes support now, but it was resistance. So if we break the first support, we potentially could come down here and get some liquidity and then continue the bullish drive. Or alternatively, this support could hold. If it holds, then we're looking to possibly go to the first resistance, which is 89.55, and then ultimately we're looking at this 93.14, 93.15 area as an ultimate target. But I think the general consensus is I'm mildly, not mildly, I'm bullish oil on a macro view, and then on a technical view as well. On an intraday view, I'm also bullish oil. So looking to buy any dips that come. Let's go to gold. Gold again. We had a good day yesterday. The bulls came in and they pushed price higher. Okay, let me just expand it. I talked about this invest bullish head and shoulders potentially taking shape. Yes, on Tuesday we had a doji candle that was bullish, and then it bounced off the 1641 resistance level. And then from that yesterday, the bullish momentum continued. Price went all the way to the resistance zone that I had highlighted, 1672 to 16.8 to 1679 ish, and then price couldn't break that zone. Let's see what it looks like on an intraday basis. This is what the picture looks like. So you can see that we had a trend line here that was broken. Price came down, tested the trend line at 1614, and then that gave enough bullish impetus to just take price higher. We dipped a bit here, and then we went up higher. We couldn't take this resistance zone, and we saw the bears coming in, and currently this is the status quo. The bears are in, and they seem to be pushing for correction. We have a weak support level at 1656. Uh, this could act as another springboard, probably for price to continue its bullish momentum, or alternatively, it could just be broken. But the ultimate, I think, support for today would be the second support, which is 1641. So I'm looking for this to cap any dips that we have. I don't see price playing below that level for today. This could be a potential cap here. On the upside, I think the cap side, the cap could be the channel boundary, which is my second resistance. It's really like a trend line. So this whole area here, this channel boundary is my upper cap for price today. So I'm looking for that second resistance and second support to be the zone where price plays at. You can see our inverse bullish head and shoulders here. This can only be confirmed after we break this. If we break it and then on retest, then this can confirm that that formation. Let's go to natural gas. Nat gas retreated yesterday after 2 consecutive days of just bullish momentum. Overall, I'm looking at price going all the way up to retest this trend medium-term trend line. Let me just put it in the picture. This medium trend line here, it was quite strong, so I think it becomes resistance, obviously, because price is coming from below it. So I'm looking for price to come up, retest it, and then possibly continue the bearish move down. But yesterday we had an interesting candle here. It looks like a hanging man of some sort. Like it just shows that the momentum from the bulls was not enough to push price further up. What does that look like on an intraday basis? On an intraday basis, this is what we're looking at here. This is our hanging man here. If you see a price came down to that six level here. I talked about this level, about how price had disregarded it on the way up, but then you can see now it respected it yesterday, and we seem to have bounced off that, but we couldn't go further high, and we seem to be capped by this. It's a weak trend line resistance, and price seems to be on the verge of making a correction. So levels to watch out for is again that 6 level. We could potentially bounce from here and continue the bullish momentum upwards, or if we break here, then this could be some sort of a, like a double top of some sort, and we could break this first support and then go all the way down to the second support, which is at 5.67. So I think those are the levels to watch out for. This second support here and the first resistance, which is the trend line, medium term trend line. We should watch out for that. If we come here and then the bulls have enough momentum, then we could potentially just push price and continue the bullish momentum all the way to the first resistance, which is our trend line. Let's go to that's on natural gas. Let's go to Bitcoin and see what happened with the crypto. So Bitcoin has been on a bullish run really for the past 2 days, and the momentum is really big. You can see even the size of the candles is even bigger than the average candles that we have. So since Tuesday, we've had one bullish candle, and then we had another bullish candle yesterday, which is Wednesday, and this really just is more or less mimicking the risk on appetite that we see investors having, especially if you look at the US indices. So like we said, Bitcoin is really becoming more of a risk on asset, obviously, because I think institutions are also coming on board and taking it up and all. So, but then what we see on a technical basis, price is currently at a resistance level at 2830. We haven't had a good correction, so maybe we might be due for one. Uh, let's see what it looks like on an intraday basis. This is what we have on an intraday basis. We had a trend line resistance that was broken. Here, and then price came down, and it really never closed below that trend line resistance, which became support here. So I think that should have been a telltale sign that, listen, the bulls are really there to maintain this momentum that they push through here. And lo and behold, really it then broke out of a small little triangle formation that I'd put here. We broke out of there, and then since then we had a bit of consolidation here, but then broke out again, and then we seem to be consolidating again here. So uh, as for today, really price has two things that could happen. We could break the first resistance, which is 2830, which is where we're currently trading at. If we break this first resistance, then we're open to take that 21,700 level here. Or alternatively, we could be seeing some sort of like a correction. Let's see this drive here all the way up to here. Yeah, we could see some sort of a correction, and price could really come and get liquidity right down to the second support, which is close to the 61.8 fib retracement level there. So that's an alternative view. We could just break the first support and then come all the way down to the second support, get some liquidity, and then continue the bullish momentum. So I mean, I'd be my bias is we come down, we take liquidity, and then we go up again. But either way, Bitcoin looks bullish, and as long as I think the investors remain risk on, then I think we'll remain bullish on Bitcoin. Over to you, Steve.
Cheers, Taff. Thanks for that. Nice roundup. I'm going to dive into FX to start with. Let me just share my screen. Plenty to talk about on the FX front. The dollar volatility obviously has continued, with the correction lower has continued. I'm going to just show you a couple of daily charts which I've got. Well, actually, I'll start with the weekly on the dollar index. Now, this is charts that I've got. They're different to Joe's, but generally they're pointing in the same direction. This double bottom formation had a measure move target all the way up to around about 120. So for me, that's still a medium to long-term target. And naturally, during this this is a weekly chart, during these this rally, we get these pullbacks. We've had 2 or 3 now, decent ones over the last, well, since May, so the last like 5 months. This is one of the biggest sell-offs we've had in this period. So this is the biggest correction the dollar has had since we started this rally all the way back in May 21. Now, the nice sort of like reversal candles. We had a shooting star candle of the week. We had a bullish hanging man candle on the weekly. So there was the first signs of a stall and potential for a reversal. And we have got that now. So looking on a daily chart, where are we really targeting on a shorter term basis? So we've got a couple of trend lines that have, let me just get rid of a few just that aren't really of interest at the moment. Even this. So we showed that on the weekly chart. So this trend line that we've it's been in place since February this year. We've got 1, 2, 3 decent touch points on it. So it's a nice solid trend line. Now, the most recent rally, we had a bit of a pullback to August the 11th, and then we've had a nice decent rally higher. So if we take a Fibonacci retracement lines and draw them on, we get a nice, obviously the 61.8 is the you know, a technician's favorite Fibonacci retracement line, and that comes in at 108.50. Now the trend line that we've drawn since February also comes in just above that level. So that's coming in at around about 108.85. So we do expect, and if we look really here as well, this is where I really see a decent amount of resistance coming in, support coming in. Let me just can I make it any bigger? Style of it. Just want to sort of like separate it out so it's a little bit clearer. So this is a dotted line, not that clearer, but that comes in at 107.70. So I think from the 108.80 all the way down to 107.70, I think we'll get potential short covering and dip buying into that area for the next leg higher. That's how I feel about dollar index at the moment, and let's see how that reflects on the euro dollar and dollar yen. Euro dollar, right, we've got this since February, so around about the same time as we talked about in the dollar rally. We've obviously seen a sell-off in the euro dollar, and we've built a really nice channel which has got decent points on the top and also connections on the bottom. So this is really trended lovely, really nice thing that technical analysts like to see. A nice bearish channel. Now we have had the breakout, and this breakout was mentioned yesterday. Joe mentioned it on the show yesterday, and we can see how much this has extended today. Yeah, from yesterday's price action, we've seen a nice break through the resistance, through the parity level, which we talked about yesterday, a break above parity level. So for me, the short-term support will come in here at this 1 level, and upside really with the first sort of target we'll be looking at would be this the previous swing high comes in at 101.92, and above that 102.80, and even up to 103.70. So they're the sort of like short-term levels on euro dollar that we're looking at. So and also potential for some more trend support coming in, which already has 3 nice points. So any pullbacks would really look at this reverse trend line and this a new short-term trend line. I wonder if we can get even, let's go as far as getting a channel in there. So just be prepared for this channel. Something like that. So even today, we should see resistance, as we said, around about this 101.70 level on the upside. That should cap prices today. On the dollar yen side of things, let's take a look there. Obviously, we've got this trend higher, 3 really nice points, or 4, we could say, broke through it on the 24th of October. So that was the first sign that a potential for a reversal. But this bearish outside candle from last Friday really epitomized the turning point. Made a really nice high up close to 152, reversed lower, but engulfed almost a week's worth of market data. So that was the turnaround. Then the next candle was, could call it a hanging man candle, very similar to a hanging man candle, and that sort of really tried to bounce back but failed Tuesday. We've had negative price action since then, and we've broken down below that spike lower, which we saw at 104, around about the 145.50 level. We've hit what was a previous swing high and a good resistance level down at 145 this morning, but we've bounced off there. I think there's still potential for further downside, and again, I've drawn the Fibonacci lines in from the swing low to the swing high, and that brings in the 38.2% fib retracement at 143.71. Below that, we've got the bottom of this sideways channel that we had, and that comes in at 141.50. So negative price action there. Also resistance coming in today around about 147.50 poly yen. Yeah, so I think that's pretty much covers the levels on the FX side of things. So let me dive into some indices, talk a little bit about them, which I normally cover. And we'll talk about the FTSE, this inverse head and shoulders, which I highlighted last week now. That's continued to push higher. We've got resistance coming in just above where the market's trading at the moment, 70.70. The measured move target for the inverse head and shoulders is up to around about 7,330. But another natural target would be around about 7,200, which isn't too far away, but still probably out of the scope for today. So for me, looking at the 127 Fibonacci projection level is also where the swing high came in. The 6th of October high, that comes in at 7,107. So that would be my first target for today on the long side. Support down below 69.50. A break of there could open up the downside towards the right shoulder, but it seems the momentum is to the upside. Maybe any surprise from the ECB today could impact on the indices, which would naturally impact on across the board. These indices are all pretty much linked. It would impact more so on the Germany 40 we're looking at now. And here we've got this bullish channel, which we broke above the top of the bullish channel. So that was extra aggressive to the upside yesterday. We took out the 61.8% fib retracement level, but sellers fought back and tried to cap prices around these levels. So really the resistance around here is obvious, and but it feels like the momentum has shifted, and it's really a buyer's market again. Support coming in at 12,975 on the Germany 40. So buying in front of there with a tight stop below wouldn't be a bad way of doing things today. Let's try and get another trend line in. Just this will be quite an acute trend line. But it comes in around about that same level. We've got two decent connection points, really looking for a third touch point. So any dip today would definitely sort of like lend itself to be an opportunity to try and find some value in the market. Looking at the Wall Street US 30, that continued higher, and we actually got up to the 61.8% fib here as well, 32,100. The measured move target for the double bottom isn't far away either, 32,330. So further upside still. We've had 4 positive days, although the ranges are getting a little bit smaller. So that's maybe a slight sign of bearish divergence. So be aware of that. Yeah,
I saw that as well.
Yeah, I'm not sort of like overly convinced that it's a doji candle or a dodgy candle, as we like to say. Yesterday, that's a sign of indecision, and potentially a little bit of profit taking may be happening there and into today as well. So watch out for that. The Nasdaq hasn't had quite the euphoric ride that the Wall Street has had, and we have stalled around about the previous swing high of the neckline of the left shoulder to the head. That comes in around about 11,685, where the 38.2% fib retracement is. We've got up to that on Tuesday. Yesterday was bearish. Tech stocks taking a bit of a hit, and potential for a retest of support, which was the neckline between the head and the right shoulder here. That coming in at 11,378. Break of there potentially opens up the downside. We talked about this yesterday. Maybe buying the Dow, selling the Nasdaq was, a nice way to sort of like hedge this potential upside, which is, although it's looking like slowing down now. Finally, the S&P, a really, really, really clean doji candle. Really kind of indecision. So is that telling us be really careful with this? The double bottom that we drew in place, measured move target for that was all the way up above 4,000, 4,055, but that's a long way off, and we've stalled at the 127 Fibonacci extension level, and another key level that we like to look at. So I think I'll wrap it up there, unless anyone else has any weird and wonderful requests. Yeah, Sanadid, I received the notification for the stream always late. Do any of you here have the same problem? We'll try and do something with that. It would be nice if we were able to send out a notification about 5 minutes before the stream. But what happens is the stream only notifies when it goes live. So I'll talk to TradingView about that. Maybe we can get some assistance with that. But thanks for your input on that. So this is the part of the show that we go to the Gun to Head Challenge. This is where each participant on the show, myself and Taff today, pick a trade live on air, and we enter at market, either selling or buying whatever asset, and place a stop and a target with at least a 2-to-1 risk-reward ratio. That's something that we stipulate with all of our analysts for our intraday trade ideas. And the trades will expire either at 9 p.m. or when they hit the stop or hit the target. So we'll try and take a little look at, let's see if we can see how we got on yesterday. If you want to bring up how you got on yesterday, Taff,
Yeah,
I'll dive into yours as well. Let's
sure.
see. Dogs in the background.
Just saying good morning.
Yeah, just saying good morning. Yeah, let me, ideas, here we go. Right, my idea from yesterday was silver clouding the upside, and I was looking for a little bit of a turnaround, see how this plays out, although it's not really. Why is
Internet
that
is
not
not.
working? Is that the internet?
I think so.
Yeah.
Yeah, you can.
Well, it did play out. Let me see if we can see Joe's. How Joe was buying cable. No,
Yes, definitely.
here. Yeah. Yeah, I'm sort of having a bit of an issue with that one. Let me see if I can get
I can show mine in the meantime.
yeah. If you show yours, Taff.
Sure. So I'll gladly show mine because the
Hey.
so I was buying platinum on the backdrop of breaking out of this channel flag formation type of, and that worked out really well, man. So yeah, bagged
Nice.
2.39 R there, you know.
Can't
So
get better
yeah.
than that. I wonder why you're keen. I wonder why you're keen. Let me see if I can. Obviously, TradingView also has a desktop app, so let's see if I can get this working
Yeah, that
a
should
little
be.
bit better. Yeah,
Yeah,
that's
there
better.
you go. There
Lovely.
you go.
So yeah, at 9 o'clock, I was on side. Where was I on side? 1950. I was selling at 1962. Only 12 points on side. Not a great deal, but a win's a win. And
Yeah.
Joe, what did Joe do? Joe was slightly on side. Didn't really go against him. He was getting long at 114.30. Sorry, entry level 115.42, and where did it close? Oh, he's done it on a 4-hour chart just to make things bloody awkward, mate. So we'll have to work out where that closed, but it's around about 116 by the looks of things. So at least he saw a little bit of profit there. So Taff, have you got any ideas for today?
Yeah. I've got
I
was looking at natural gas and this hanger man I think would possibly indicate like some sort of correction. So I think I'd want to take that and just possibly see if that plays out. So I would sell that at market, put my stop above that previous high there, and then just try and target. Let me see this swing level here. Yeah, and to get 2.58. Yeah. So I'm selling nat gas at 6.155. And then my profit target is 5.835, and looking at putting my stop at 6.279 with a risk to reward ratio of 2.58. So see how that goes.
Excellent, nice one, Taff. The only one really that's sort of like cropping up on my radar is probably, let me just share the screen. It's probably gold, and
Yeah, it's I looked at that before, but then the the parameters I wanted, it had just gone down too much for my risk to reward, but it's looking good
Yeah.
for a short there.
Yeah, exactly that. That we've sort of hit that resistance band again and
Yeah.
rejected it nicely. A little bit more, if we do get a little bit more follow through on the risk assets, the indices, and everything like that, we could, and maybe, you know, obviously the dollar selling off, that sort of lends some strength to gold, and I think that's why we've had this rally we've had over the last couple of weeks. But yeah, I'm sort of after selling silver yesterday, I feel confident enough to take on the big boy and get a short going here. As Taff said, the risk reward isn't the greatest. We could look for a little bit further to the downside, although reaching some of these levels today looks a little bit far-fetched. I could be a little bit more aggressive with the stop, but I tend to find that if you are aggressive with a stop in gold, it normally comes back to bite you. So this is getting short at 1661. Let's. I feel like I've got to do more than a $10 stop, and let's do. Oh. Yeah, let's look at that one. 3-to-1 risk reward, selling gold here. The stop is at 1672. Well, ideally, it should be at 775, shouldn't it? Let's get it up there. Yeah. And let's bring the target in as well. I'll go 2-to-1 risk reward, be a little bit more solid. Getting short at 1661, targeting a move to 1631 with a stop at 1676. I feel a bit more confident with that now. The stop's above that.
Yeah, that's a bit safer.
Yeah. Okay, that's my idea today. Yeah, I hope you hope that makes sense. This is just a bit of fun we're having. Don't sort of like rely too much on this. This is a bit of fun, a bit of gaming we have with each other, and we monitor the performance of this because this isn't the ideal way to trade.
To put a trade, exactly.
Yeah, put a trade on just at the drop of a hat or under pressure. So it takes a lot more time to plan and think about this. Although we've done pretty well with it. But anyway, let's move on. What are we expecting today? ECB policy decision says at 1:15. Maybe they've changed their times.
Yeah, I saw that on my calendar as well. It's 1:15.
Oh, okay. And the press conference then at 1:45. In between that, we've got US GDP, the first reading for Q3. That'll be important. Let's see if we're in recession or not. And the Bank of Japan policy decision at 4 o'clock in the morning Friday. I won't be up for that, but good luck with anyone who is. Key events over the next week. November the 1st next week is Chloe's birthday. But also, as well as that, it's the Reserve Bank of Australia's policy decision, US manufacturing index, the second. We've got the Federal Reserve policy decision, and next week, Bank of England policy decision, with the US unemployment report coming out on the November the 4th, with the Canadian employment report. Sorry, both employment reports coming out on the 4th and the 5th next week. So that's non-farm payroll. Oh, yeah, non-farm payroll next Friday. Yeah, brilliant.
Yeah,
first Friday of the month.
Friday.
Okay,
this Friday.
Brilliant. Okay, well, we'll get them trade ideas posted live on the show or posted onto our platform, so you can have a little look at them later. But good to hope you enjoyed the show today. Good to be with you, and we'll see you again in the morning. Cheers. Take care.
Bye.